Did the Chinese just kill a rate hike here in the United States by showing its weak hand of cards? And will it move overnight? Will that spark a currency war with China? And what will it mean for U.S. investors? In a Fox Business exclusive, we're joined now by Stephen Roach, former chairman of Morgan Stanley Asia, now at Yale University, along with Leland Miller, China Beige Book International president. Welcome to you both. There is no doubt. All you look at is red on the screen, gentlemen, and you see that this is definitely affecting the markets. But Stephen, you've been inside the head of the China economy for decades. Is China panicking? What's behind this move?
Liz, they're not panicking, but it's clear that the weapons they have used to date to stabilize the economy are not giving them the confidence that the growth is going to stabilize in the 7% zone. So for them, the currency has always been the big bazooka, but it's a problem to use that type of artillery in a weak global demand climate. And, Wilbur Ross, my good friend, is right. 2% is not going to come close to giving them a boost to their exports. So I think investors are concluding today that despite the claims of the People's Bank of China, this is a one-off move, that this is the first of many moves to come, and that's the concern that's got the markets rattled today.
Leland, do you agree? Do you think that this wasn't just a so-called one-off move, and you've got a situation where China has to do way more to stimulate its markets?
I don't think the intention is they're going to do more. I think that the reality is that this is a one-off move for now.
So you disagree with Stephen?
I do disagree with Stephen. I think that they're trying to present the right face to the IMF about yuan entrance in the SDR, and as a result, they're trying to move things around in a minor way. If they were trying to use this as stimulus, they would have done more. If they were trying to do a real devaluation, they would have done 10% or 8%. So this is really a minor move. I don't think they're trying to shake things up by it.
Well, Stephen, they shook things up. You have gyrations in markets all around the world, from currency to commodities to stocks. How much more do we have to endure here? And do you get the sense that the U.S. is more tightly linked to what China does than we really wish?
Well, Liz, we're very dependent on China. In fact, that was the thesis of the book that I published last year, talking about the codependency between America and China. We depend on them, and they depend on us. And by the way, they are our third largest and most rapidly growing export market. So in a weak domestic demand environment in China, this is not something you can just ignore in terms of providing impetus to the U.S. economy.
I wonder if the Fed is doing anything but ignoring this. Leland, is this going to kill the Fed rate hike in September? Because Janet Yellen has to take a whole bunch of things into consideration. Does this now destabilize what was already a tentative yes on September?
It should not. They should absolutely still raise rates. Now, is there fear that potentially the United States would be importing deflation from China? Yeah, they're worried about that. But the reality is the economy, the underlying economy, is much stronger than people understand right now. The stock market, which has scared people and created the beginning of this panic, is not connected to the real economy. And so I think people are overreacting again.
Stephen, do you think it hurts the chances of a September rate hike?
Well, I agree with Leland that the economy in China is stronger than the stock market indicates. But in terms of what that means for the Fed, the Fed is going to have to weigh the considerations of further strength in the dollar, which they always tend to downplay a little bit.
Well, now it's really strong. It's stronger than it was yesterday, Stephen.
Yeah, but they've got to look at the strength of the dollar, Liz, versus the instability in the markets. And if markets continue to be destabilized on the fears that there will be more cuts in the renminbi to come, and I strongly disagree with Leland on that, then the Fed will certainly keep its powder dry. They're not going to tighten in the face of a destabilizing financial market climate in the U.S. and around the world.
Hey, so we may see that. We want to thank you both. Stephen Roach, former chairman of Morgan Stanley Asia and now with Yale, and Leland Miller, China Beige Book International president. Good to see you both. You still think there's going to be a September rate hike, don't you?
I don't know if there will be, but if they don't, it should not be because of the China situation.
Well, we shall see.